The following is a presentation of TFNN. The Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Basil Chapman.
Hi, everyone. Basil Chapman. Welcome on this fifth day of July. My pleasure to be here. And the Dow's down 109 at 17,839. S&P is down 16 at 2,086. Let me move this away. Oh, this is a 10-minute chart for those of you trading. What we looked at was a left side at 2081.50 in the E-mini back at 10 to 4 on the 1st of July. Running up in two buy modes to peak D, pulling back to trough D, then to peak D again. 2104.75 right there at 240. That's 20 to 3 Eastern time yesterday. No, it couldn't have been. It must have been in the morning. Yeah. Early in the morning. And then it pulled back. And then at noon, I sent out for my subscribers, anyone who was looking, because I was busy sending charts Saturday, Sunday, Monday, to my opening call subscribers, I said that right here, that up channel support needs to hold, but the way it looks, we will be coming down in a left side, right side price time match, which is what we did over there, and that started off triggered a whole bunch of sell modes in the E-mini. And if you look at the left side, using this as a plumb line, that high that was made right there on the first, as a plumb line right there, you will see that we made a perfect, more than this you couldn't expect. Left side to the right side with the Chapman wave inside wedge, dashed line, target line, going right there to 520 this morning as a test of the 2081.50 level. Well, we made it 20 minutes early at 2082, missed it by 50 cents, ran up to a peak C minus at 5 minutes past 7. No, 5 minutes past 7. On the 5th of July at 6:50 at 10 to 7. And then we came back down and we broke that level. And my rule of thumb is if you break that level on the left side, you've got to close above it within one bar. And that's exactly what it did, to at least have a bounce. And that bounce could take you to trend line resistance or the left side peak. Well, we went right in between the peak, first peak and the second peak, and we turned around and we plummeted now to a low that's so far the low of the day, and that low is at 2077.75. The sell mode continues. We're going to see if we're going to get a bounce off this double bottom low. That's going to be important because it's getting quicker and quicker to the downside, but it hasn't pierced yet that left side. So this is a very important moment. We'll follow it later on. Let's go on with our story. We're looking at crude oil. That's CL, that's Colgate. There's a crude oil. Whoops, I went to the wrong chart right now. Let me go in order. So you've got the QQQ at this particular point down 85 cents at 107.23. Super leg A from 101.75 all the way to the 108.60 area, was it? 108.48 area, and now we're at 107.25. I think the 9-period moving average between that and the 106 level, the 106s should be important support for the QQQ Power Shares Trust Series. Looking at the gold GC, you'll find that gold has pulled back a bit. It was up $13 before, $14, and now it's up 7 at 1346.7. My thinking here is that gold is acting very well. It's kind of a bit of a currency of fear in this particular instance, but most importantly, the GDX, which is the gold miners, has had a very strong move to the upside. I'm calling it G/B for the moment. But a lot of what I'm looking at suggests that it could be a little bit toppy, but it's still holding extremely well. And that weekly chart is broken out, is way above the 200-period moving average in the GDX. And it's at 29.08, up 4 cents. but 26.31 to 25.62 are moving average support levels. And there's been a whopping leg A to the upside. And because it's gone even higher on the monthly chart in July, my thinking is that it would be June, July was the extension. Maybe we're looking at August and a little bit of September where gold has a bit of a pullback. We'll see. It's going to be very interesting to see how we pull back to the 26.31, 25.60 area to see how this move up gets tested. But so far, gold is acting extremely well. Let's go to silver. Silver at this particular point that had a spectacular move. That's had a leg D, and I'm beginning to think that this leg D is just running out of energy. It hit 21.225 this morning. It's trading at 19.80, and I got a feeling that this is telling me that gold and silver could have a bit of a pullback this week. But they're still holding very well because it's the dollar. You see, the dollar's up. It's up 15 cents at 95.80. It's unusual to have them both go in the same direction, but they can go. Gold and silver can go in the same direction for about 3 to 6 weeks every few months in the market over a period of a year. But most of the time they're going in counterpoint. So this is saying to me that the dollar is one of the stronger EUR, USD. It's one of the stronger currencies out of all of the currencies. And it should hold quite well. It's at 95.80. But unless the dollar can get to 96.30 by today's Tuesday, by Wednesday afternoon, Thursday morning, maybe it's just stuck in this little range here, like a rectangle formation. I think it actually is going to move a little higher as gold just takes a bit of a breather. And if you're looking at the euro dollar, yep, it's gone to a leg B. It could pull back. It doesn't look good. Euro dollar looks to me like it wants to pull back to the 1.1 area, and it's at 1.11, down just a little bit. Yeah, that's what I think. USD JPY, that's the US dollar Japanese yen currency pair. Also had a rally and a rally failure with an arch formation. Doesn't look that good. I really do think the dollar is going to improve and that gold could have a bit of a pullback. I'm just saying a bit of a pullback. Would I short it? I think I'm getting closer to where I think it could pull back deeper for a shorting opportunity, but it would only be considered a short-term pullback. I wouldn't get too carried away. I'd rather be looking to buy it on the next big pullback. Okay, then we go to high-grade copper, HG. That's had a very sharp pullback. I think it's making a peak D here. I think, the commodities, I did this earlier on. Have a look at this. TRCCI. This is the Reuters. It's actually not Reuters. They call it Reuters, but it's really the Thomson Reuters because Thomson took them over. Thomson Reuters Continuous Commodity Index. This is the monthly with the Chapman wave notation. And like gold, like many of the commodities, that is spectacular. Many months moved to the upside in leg A. But here I'm looking at it with a potential peak F in the weekly. But most importantly, the daily had... It's like a C. I don't know. I have to count it differently now. A, B, C. I keep getting C. Well, I'm thinking that the commodity index is about to pull back. And one of the reasons is if you look at the W, that's the wheat. Wheat has just plummeted. If you look at corn, corn plummeted. That Eiffel Tower straight up, straight down pattern, it's failing. We'll be back. My contention is the Dow's going to be pulling back even more, and the S&P after a spectacular week. I'll be right back. Basil Chapman, Tiger Technicians Hour. Dow's down 131.
Today, many commodities are trading at relative lows. And now you can take advantage with Everbank's new limited-time, 5-year, market-safe currency comeback CD. This indexed and U.S. dollar-denominated CD offers 100% principal protection and is based on the equally rated performance of currencies of Australia, Canada, Chile, Mexico, and South Africa. These 5 countries are especially rich in commodities, and their respective currencies are poised to do well should commodity prices begin to recover. Keep in mind that no APY, or periodic rate of interest, is paid on the CD. Don't miss out on this innovative new financial opportunity. CDs must be opened and funded by the upcoming July 14th deadline. To apply online and learn more about the CD, including product terms and disclosures, visit everbank.com TFNN now. This advertisement is sponsored content. Everbank is a member FDIC.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Basil takes your phone calls. Now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Oh, let me just go back to the 10-minute chart because there was a big spike for some reason to the upside. So the E-minis went down to 2074.50. Let me type that in, 2074.50. And the trading right now at 2081.56, up 7 points. That's no, it's up 6 points. And so far, that's a nice bounce. But I think that we're trying to find some kind of a base, at least for a short term. But we'll come back and retest that most probably by tomorrow. I'm just thinking we need a few days of rest. We had a spectacular move to the upside. Now let's go. Let's continue with what we're looking at here. This is crude. This is corn. That was, look at even SB, one was sugar again, right? Let me just, I keep hitting the wrong key. Right there. SB, which is sugar, looks to me like in this huge move to the upside. I mean, sugar is gone. This is really something. Here we are talking about diabetes and how people need to cut back on the sugar, blah, blah, blah. And look what happened. Sugar goes just from August, where it was at $11.31 to $20.62. Come on. I mean, this is amazing. So you've only got isolated cases now of really bullish action in the commodities. Quite a number of the commodities have been weakening, and I got to watch that real closely. So sugar's still looking good. Nothing wrong there. A little choppy. Now, the one that I need to look at is PL, which I think is platinum. Yep, platinum has had a very nice move to the upside. Interesting how they're rotating through the different commodities, whereas before you had selectivity and a unified thing with gold and silver moving, crude oil and actually natural gas, even though sometimes they go in opposite directions. And now look what's happening. Crude oil is pulling back sharply. Natural gas is suddenly pulling back. And platinum is up. Platinum is at 1,065.40, up 830. And I think it's going to try to tackle the high that was made right there the week of the 6th of May with a high of 1093.80 to make a leg D. That would be a leg B in the commodity, in the platinum monthly chart. The first leg B we've seen in many of these commodities, almost all of them have only got A's. Interesting. Okay, so now I wanted to go to a couple of things. I wanted to show you, let's see if I can find it right here. This is the Investors Business Daily. And there are a couple of stocks I know that about 2 months ago, I was looking at them here on the show. I took a little time and I was saying a lot of them are becoming quite toppy. Well, they were toppy. And then some of them just went right back. Look, there's right here. There was that whole May period when they pulled back, May the 9th. Core, which is Care Site Realty Corporation, data center facilities. And then it pulls back and it goes from the 79-ish level down to the 73s, holds very nicely. And before you can blink an eye, you look around and you've got a peak A, a peak B, a peak C and a D, an E, and I wonder if that's an F or a G. Oh, yeah, maybe it is. Okay, let me just double check. I think that looks like a higher. 74 goes to 73. Instant restart. So you've got the Chapman Wave instant restart right here. And it recycles up and it goes to another A, B, C, D. This is the third one. What a nice technique, huh? Look at that. How did it even know about the technique? And it goes A, B, C, and I think it's going to make a D tomorrow the next day. And the monthly charts are E. And I looked at so many of these charts, I didn't have a chance at all to do notation on them. I just had a quick glance and said, okay, I actually get every day, I get the IBD, and I never kind of remember to look at the darn thing electronically. And then I go to the, on Saturdays, most Saturdays, I try to buy the thing because I like paper. What can I say? I'm just used to it. Old fogies like paper. Hey, Scott in Safety Harbor, how are you?
Fantastic, Basil. It was a great weekend, just a few too many explosions.
Yeah.
This seems a little bit inappropriate, you know?
Yeah, it's very interesting. When you listen to the words of some of our famous songs, a lot of military there, a lot of military.
Yeah,
so,
you know, war and everything is like Trump said, and Donald Trump said, and they have it in his ad. He says, I kind of like war. Well, he's never been in one.
Yeah. It's easy to say. Let me tell you, you've got to have admiration.
See a Vietnam veteran, a license plate, say, hey, what was it like in war? And I don't think he's going to say, I liked it.
Right. I doubt very much. Right. And it's easy. You know, when it comes to politics, it's almost always do what I say, but not what I do. So, okay, let's go to the stock you want to look at. You're looking at CX, which is CMEX.
I want to look at CMEX and real quickly then go to Delta Airlines, which is seeming like a really good setup. But let's take a quick look at CMEX.
So CX is the symbol. It's $5.92, down 24 cents. What's interesting about this chart is, remember I spoke to you and I said, I'm just a little concerned that it's starting to make lower lows and lower highs, even though the weekly chart says there should be support coming in very soon. So I'm still a little bit concerned here. It's at 591, down 24 cents. That 550 level is going to be really important. My eye says that there's a chance by today's Tuesday, so it'll be Wednesday, Thursday. I say Thursday by between 2 o'clock and Friday 11 o'clock. By the time I start my show, if CX is held firm, it just refuses to go under 570, 560, that area between 570 and 560. I think that'll be my first sign that I'm saying, okay, now the weekly looks that if there is a chance at all for this sector to participate by itself even in some kind of a move to the upside, because as a sector they're starting to move, that says to me 624 to 650 will be a real quick target. But I have to get some stability here, and the fact that it gapped down today after actually looking not bad on Friday says to me, just you got to hold off a little bit. Now you're looking at more like, for the first time, you're starting to look at core positions. And I would say to you, you're going to get your opportunity this week to start nibbling at a core position on CX. And I would treat it still as a starter position. Probably, I'd say if tomorrow is weak at the opening for the market and CX pulls back and it gets to the 570s, I'd have just a little bit of patience. But I'm thinking above 520 is really the opportunity, because if it can not break 520 in the next 2 weeks, if the market pulls back, say for 3 to 5 sessions, and then wants to start moving higher, When it moves higher, I think this will be a participant because the weekly chart, the MACD is holding quite nicely. The monthly chart has had the whole consolidation with a much higher high than it had back in 2011, which was under 2. And this last one was in the high 3s. So I'm thinking it's making a gently over a period of time. Well, I say gently on a price basis percentage move. $2 to $12.50 is huge percent, but I'm saying just gently in the sense that it's very steadily made it up, moves to the high side on the monthly chart. It's actually very steadily moves lower down to the lower lows and lower highs in a down move, but it didn't break that previous low. So this is saying to me maybe this time around it's going to find support, and that will start a leg B to the upside in the monthly, which would be above that $7. I think it was 52 cents or something. So you got another question?
If you got a chance, Basil, I'd like to look at Delta Airlines. Is really looking good. Hadn't been this low since 2014, and it's.
All right, we'll be back. We'll look at Delta DAL trading at 35.20 down $1.54. We'll be back with Scott in Safety Harbor in Florida.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Hi, folks, we're back. Dow's down 107, S&P's down 15, and we're on with Scott in Safety Harbor, Florida. And we're looking at CX, and then we did look at CX. I said just hold it for a little bit. It's still consolidating. And then we looked at Delta. I've got XAL, which is the overall ARCA airline index. and it has the same kind of pattern because Delta's been one of the leading stocks there. But the pattern in the XAL says that their monthly chart at 80.92 down to it's 84.91 that it has to go above for the 9-period exponential moving average to really become support and not resistance. That's number one. Number two, I've seen the same thing in the weekly chart with the 9-period moving average since it took down the when it made a peak C minus, now I'm calling it top, and the week of the 22nd of April at 96.80. Only once has it closed. 1 week has it closed above the 9-period moving average. That's the week of the 10th of June. Went to 89.09, but almost every week, even last week was a great week, didn't even get close to the 83.16 level in the 9-period moving average. Actually, that was even a little higher for that week. So I'm looking at it and I'm thinking, okay, so now we've got Delta. So my overall impression is that the daily chart has a nice leg to the upside and it's held quite well, but it's going to have to do a lot more to really improve the weekly chart. And the weekly chart has to go about 3 points higher to 83.97, and 83.16 is the 9-period moving average. At 83.97, I'm saying, hey, that's new leg B. No, that's new leg A. It's very good action. Let's see what happens afterwards. But when I look at Delta, the weekly chart, in this case, although the pattern was close, the down move in the monthly chart is suggesting to me that it's going to need a little more time to base. And that's really my issue here. So I'm thinking that at 35.22, yes, if everything works out by the end of the week, we have not taken out, not we, Delta has DAL trading at 35.22, down $1.56. If it hasn't taken out 32.60, the low of the 27th, 5 days ago, then I'm going to say, oh, okay, it seemed to be making some kind of a base. If it suddenly spikes above 37, let's call it 37.20 to go into the gap, I'm going to say, hey, that's nice action. So, Scott, I'm going to make the recommendation. You're asking my opinion. My opinion is that I would rather buy strength in Delta than weakness. I don't want to catch a falling knife. So I would rather buy at 37, 36. No, 37 was the round number high on the 1st of July. That was on Friday. If Delta goes to 37.02, 2 pennies higher, I would say I'd start a position, and that would be a small position, but it's a starter position because that's the first time you're looking at strength because it started a leg B to the upside. Right. Every other one has had an A and it's failed all the way down from the high that was made back on the 18th of May at 44.66. So I might be wrong about my actual trading entrance, but I think I'd rather buy strength. Now, how would I buy weakness? I'd buy weakness if by today's Tuesday. I'd even give it until Friday. At Friday's close, if it hasn't taken out the low of the 28th of 33.60, that's not even the low. The low's 32.60. I'm saying a point higher, 33.60. If it's holding above that, then I'd say, okay, if you want to just nibble, that's a starter position. But I'm really telling you, the way the chart looks, I'd rather be buying strength than weakness.
Well, I have a rule. I'll probably end up sticking with that rule, which is never buy airlines. But
never buy airlines. You know, I remember years ago, I was with Tom O'Brien. He picked me up at the airport just soon after I started TFNN. There's something we had to discuss, so I went down. He picked me up, and on the way back, as we're going past the hangars at the airport at Tampa, he said to me, "Man, airlines, I'll never forget." He said, "They always go broke, and somebody always makes money from them." And yeah. I remember thinking, geez, that's absolutely true. They would go broke, and then they found a la carte. They found that they could get people to pay for everything.
Right.
And now they're making money, but in fact, it looks like they're still losing money. I don't know how they're losing money when people are paying.
I'm not connected in any way, nor have any relatives or any way with the airlines, but I think people get a little bit ridiculous sometimes with bad-mouthing the airlines, just kind of like they do Obama. They blame them for everything. But, you know, you can't expect to go Tampa to L.A. for $99. Sometimes people got to just realize that it costs them hundreds of thousands of dollars in fuel. I mean, there's got to be a cost there involved, and I wish that the deregulation hadn't happened so you could just have a $500 ticket and everything would be inclusive, and we could do it that way. But it was because of people's demand for lower prices that they started all these little a la carte things. They're just trying to stay in business. It costs us
absolutely right. But they've pushed. I think they've pushed it a little too far. That's number one. And number two is, if you look at your airline ticket, I had one. I kept it aside here, especially, of course, I won't find it on my messy desk right now. But I kept the ticket because if you look at the taxes and all the other, the cost of the ticket is like a third, and all the rest is taxes or something like that. It was an amazing amount that is on taxes.
And not only that, but I mean, there's also zero margin for error, which people kind of take for granted until something goes wrong. But I mean, it's such a precise science. This isn't a Greyhound bus, folks. So it should cost you $500 to fly to L.A. I mean, it used to take 2 months in a covered wagon. My God, it took a year. I mean,
Well, the last time I went there in a covered wagon, it just wasn't a pleasant ride. I can tell you that. Hey, thanks for calling, Scott. Always appreciated.
Thank you.
Thank you. So, folks, we're looking at the E-mini. Remember what I said? A sharp move. And this is actually delineating this particular move right here on the E-mini is delineating in a rectangle fashion what you can expect as the highs that are going to have to be taken out intraday for you to get any sustained level of upside movement. And that says that the high that was just made at 11:30 a few moments ago at 2082 to about the high that was made at 2083.25 at 10/2/11. That's going to be the resistance if there's going to be another arch formation. But more likely, we have to come down a little bit more to get into the body. And what I like to do with these rectangles is once the price looks like it's got a comfortability factor, then I like to raise it. I don't see a comfortability factor, but if I did, I would raise it to this low right here of 2076.75, and we're trading at 2079. But that's where I would do the rectangle. But visually, I always say, okay, if you've got like a flagpole pattern, grab the top and the bottom and just say, okay, those are my parameters. And then I will try to take another little rectangle inside it and say, okay, but there are narrow ones which are way more important right now because that's where it needs to hold, and it's with that 2076 level. Okay? And okay, now I want you to do a couple of other things. Within the context, remember we looked at core and then we had a phone call. So the core, what I was saying is, look great, looks like it can go to one more high, and then it might do a sideways move, but the technicals are still very strong. Is it a short? I don't think this is shorting at this time. I think later it's going to be a short, but I need to see how that leg D unfolds because the MACD and stochastic are flat but good. They're rising in the weekly chart, and the monthly chart technicals look absolutely fabulous. That's core, and the next one was, I'll look at a couple more of these in Investors Business Daily, the top IBD 50, I like to look at the top 10 or 15 usually. I'll be right back. Basil Chapman, Dow's down 112, S&P's down 16. We'll be right back.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. Until recently, it was almost impossible for the average investor to hedge against currency risk in Europe or Japan. For a bold trade on Europe or Japan that protects against moves in currency, trade HEGE or HEGJ, 2 times currency hedged leveraged ETFs from Direction Investments. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Folks, I had a question about SPKKY, which is the New Zealand telecommunications. Let me just double back here. Spark, New Zealand telephone, SPKKY. Would you be a buyer here? Now, this is someone who likes to look at dividends, likes to look at something that has certain safety factor within it. I'm liking it, but this is only for that particular kind of investor. This is not for everybody because I don't see such a big move, but I do see potential for dividend. I do see a potential not only for dividend, but for some capital growth, even if it's just from 12.60 to 12.60 to 13. What was my target? I can't even remember anymore. I had a target in the monthly of 14, I thought. Yes, 14.41, the 200-period exponential moving average. Looking out longer term. But you have to look at this carefully because this is an overseas stock and it trades differently in the sense that it's busy trading when we are closed. So other things can happen. But yeah, for that particular investor, I would say yes. Looking for some security, some kind of, your downside risk here, 1260. I'd put some kind of a stop. I'd have to give it room 1190, somewhere around there. And if it goes to 1280, you can raise that to 1241 as a stop. Okay. Now, a couple of questions I had here. So Bob asked, Goldman Sachs. It's very interesting. Goldman, I almost put it on the list for my subscribers as an H to an M pattern play. And then I thought, why? There are so many better-looking stocks. So I'm going to say, in terms of better-looking stocks, this is not a good-looking stock. But what is important is that there's a pattern here that should hold. And if the low of 100 is trading, Goldman Sachs is trading at 144.23 down, 4 is down 2.72%, where the general market is only down. Dow's down 0.65, S&P's down 0.80. This is just not good news. The XLF must be impacted. So 138.20 is the low. I'm going to say hold off. If you just want it as a market interpretation, this is the opportunity that Goldman has to start a move to the upside. I don't have that much confidence in it that I actually want to play it because the monthly chart to me is a big worry. I think the monthly chart is saying lower lows and lower highs. And if I'm looking at the XLF, that is holding way better. I'd rather have the index as a long, not yet. I'd let it come back down. But I'd rather have that for the security than having individual stocks. Just at this particular moment, I think indexes make a little bit more sense in certain cases. So give it a little time. If you're looking at Deutsche Bank, you remember we spoke about that. I don't see anything in Deutsche Bank. I'm sorry, I'm just going to keep repeating the same thing. What is BSC is Barclays, of course. Barclays. No, I don't see anything there right now. Just be careful in the financials. They're nicer looking areas. So that, and then the crude oil, did the crude oil, but I'll do ZB. ZB what? ZBX or something, ZB something. ZBU. Okay, ZBU. Okay, I'll do U. Okay, ZB, no, ZB. I'll do at ZB. At ZB. There you go, nothing. All right, I'm sorry, I'm not getting that for some reason. 30, oh, the 30-year. Oh, yeah. So I'm going to go to US, the continuous contract. This is a powerful move up 2 and 8/32 in the bonds, 30-year bond. It's in leg F/A. I mean, I'm just going to, no, it's actually leg F/C. And I am going to put the C in now because we're at a very interesting point. Because if the market continues down, I think bonds are still going to be the safety area. And that's really important. And look what's happened. You've got your up channel. I never thought we were, to tell you the truth, I've been talking about the Japanization of our bond yields for 50, I don't know how many years, 12, 15 years at least. And I never anticipated you'd get something going on for 30 years. This channel, not the bonds themselves, that's been going since 1987, but the channel has been going since 30 years ago, exactly. And wow. No, wait, let me get that right. The TYX. I showed this when I was doing Tom's show with Tommy O'Brien. He did a great show, I have to tell you. Earlier, September 81. Of course, it's 35 years. 35 years bull market, but it's the 30-year down channel in the TYX and the 30-year up channel in the bonds. No, I don't see that. I don't know what's going to make this change. You can get a short-term turnaround, but at this stage, this is incredible. I don't think I have time now to do this. Yeah, I do. So let me get out of this. I want to show you something here. Close workspace. Go to this chart right here. Long-term charts. Have a look at this. This is just uncanny. This is the 30-year T bond yield, the 10-year T note, and the 5-year. Look at this. We've plunged. We're at 2.144 in the yield. In the 10-year, you're at 1.36. In the 5-year, you're at 9.32. These are amazing levels. These are levels that in the look at this. I'll squeeze this chart. Look at that. We are now below. I don't have anything. In fact, this chart doesn't go back far enough. This is the lowest level in the 30-year. Look at that. The lowest level. 5-year has been lower. 5-year has been down to 5.41 back in 2012. But the 30-year, nah. Unbelievable. 10-year has been down to 1.34 in 2012. All right, I wanted to mention that. And remember, this is the South African chart here with the chart that I really wanted to show you. Here is the Wood iShares Global Timber Forestry ETF. Look at that. Pulling back after a good candle last week, but it's made a peak D top, and you've got a peak C with no D coming yet in the home builders, even though rates are at the lowest level ever just about. Now look at the chart. This is what I showed my subscribers over the chart. I showed my subscribers. I couldn't even tell you how many charts I showed my subscribers. But I showed this chart and I said, we've got a C. The C should be pulling back to the 17,800s, and then we're going to see where leg D comes in, and it should come in. It doesn't have to because it's a peak C, a gray peak C. It's under the previous peak D high of 18,011. This is a 120-minute chart. So I think we're getting into the 20-period moving average of 17,763, that area, and then we should see a rally. And is that rally going to be just an A to B equals C to D to the downside, an arch failure pattern? We go lower. Or is that the one that really takes us back and takes us to a new recovery high? This is another chart that I showed right here. This one. No, I think I showed this one right here. Give me a second. Right here, this one. Yeah, this is the one I showed. And then I showed it because I wanted to show the MACD and stochastic as being reasonably good. Yeah, I don't see any reason. 7,744 9-period moving average support. Yeah, why not? We had a spectacular move to the upside. It's just time for a little bit of a breather. All right, so that's that. And I wanted to do something else. There was one other message. There goes that buzzer that I forgot. Over the weekend, I tried to research and see if I could find a booklet on this Sony radio. Couldn't find it, so we'll just put up with the beeping and the radio and this and that. I haven't figured out yet. Okay. Yeah, there goes the break. When I get back, I want to talk about the VIX index. I haven't spoken about that. I've just been holding off for a while. We'll be right back. Basil Chapman, Target Technicians Hour. And the Dow is now down 123. S&P's down 17. We'll be back.
Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Learn how to trade options with Swim Lessons. Brought to you by TD Ameritrade. Think or swim. Next on TFNN.
Hi, folks. So talking about that arch formation, remember we were talking about that in Goldman Sachs. The one that I said is a lot more successful is the IBB. So I had a question Sean asked. Sorry, can't call in. Let me just see. I know we have no trade, but what would we be looking at to go along the IBB? I'm listening online. Also reference defense stocks. J&J's on a tear, and Merck is also looking pretty good. Yeah, there's defensive stocks doing very well. Okay. IBB has had a fabulous move up. I wanted to go long and switch from the short to long side. Then we got out, and I've been sort of stepping aside. We've had fabulous moves in the IBB. We've had a 111-point gain, and then a 20-point gain, and a couple of small losses. But this has been a nice move for us. Now I'm looking at a stock that I'm saying, you know what, let it pull back. I don't think that the upside is quite completed yet. So the trade, Sean, would be, I'd be looking, and I'll probably go through this tomorrow. I'm going to wait for a little bit of a sign in my 120-minute chart to suggest that there's a base forming, and then I'm going to make the decision. Is this back to being a short? Because I think my target of 220 to 200 is still active. We've set out this last move. It's the first time we've actually done that. We had no trade. But I'm beginning to think that there might be a little bit further to go to the upside. Do I want to trade it or not? I need to assess the market at the day's end, and I need to assess IBB, the NASDAQ biotech ETF. My eye says that the monthly chart is just terrible. My eye says that the weekly chart has a little bit more of a bounce to go, and then I think it makes the H pattern that fails yet again. But do I want to play the upside, or am I going to just be patient and wait to reshort? I just don't know. I might wait a day. I might wait 2 days. I might miss the move on the upside and just be waiting for the short. I need to think it through a little bit more clearly, because my major move is to the downside. I regret getting out from the 309 level short, because the all-time high was 400. Should have just stayed there like I wanted to and just not even cover it, but say, okay, great, we've reached 220 or 200. And then said, oh, you know what, I think it can go even lower. I don't know. I think it's out of favor, and it's going to be out of favor at least for the rest of the year, I think. That's the way I'm looking at it. Most of the year anyway. So, Sean, I'm going to just hold off. Now let's go back to something else. So the other question, the S&P, Sarah asked, is the S&P now very much like 2000? Is it vulnerable? Question in the Den, P in the Den wants to know, are we going back to the most recent lows? Let me look at it as brutally, objectively as possible. We were moving along Thursday, the night before Brexit, just beautifully. Everything looked great. Bam, Brexit comes along, smashes into the S&P and the Dow, and just everything plunges, and Dow goes down 1,000 points, and then it rallies up almost 1,000 points. Now it's just giving this is a digestive move. To say that move on that Thursday, there should have been a little bit of a down move, maybe 100 points, 150. This is now the cumulative effect. So I think we can go down a little further. If we close below 17,700, I have to reassess, because then we could give that single leg A to the downside, call it a Groucho Marx eyebrows top. But the weekly chart is still really good. I like it the way it is at right now. So I'm going to say to you, no, I don't think yet we're going down even to the most recent lows, let alone the lows of January or anything like that. So yes, this is a pullback, a necessary pullback, and that's the way I'm looking at it, at least for now. Now, the VIX index is your big clue, because that was a spectacular decline from 2672 to today's, Friday's low of 14.61. So if the VIX index holds well here at 16.38, up $1.61, and by the end of the day, the Dow goes lower, the VIX index, the minute it goes into the 1680s to the 17 area, says triple-digit moves to the downside should be expected. Okay? If by the end of the day there's a big bounce in the Dow's only down 65 by quarter to 4, 15 minutes before the close, the VIX index will slide below 16, and they'll say, no, this is just a bit of a pullback in the move. So use the VIX index right now. Hope that clears up some of the things. Thanks for being here, folks, and have a great day. I'll be back. I'll be back tomorrow. And I enjoyed being with you.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
This is TFNN.